like to 100% confirm what Stan was telling about the horizontal monitoring in the Netherlands. We do have pretty significant operations in the Netherlands, and we also use this instrument. And what we really like about this is having tax certainty rather quickly. But we don't get any sweetheart deals from the Dutch tax authorities. They do audit us very heavily, and they want to know everything like in very great detail. So there are no great deals, but we get legal certainty. And we also do have a little bit of problems with this tax control framework, because no one seems to really know what this is all about. And but this is not my topic. My topic is, I think I've got the longest title of the entire conference. So it's called Protection Against Excessive Administrative Burden, Collection and Pre-Preparation of Data by Taxpayers as a Cost Problem and Technical Issues. So I think I kind of, it doesn't get very longer today. I nevertheless was asked by my chair, actually I was not asked, I was told to be quick, you know, to save some time so that we get out here quickly. So let me try to do this. What are we going to be looking within the next 20 to 25 minutes? We were talking about tax transparency more on a theoretical and law level for quite a while. What I would like to do with you, I would like to kind of show you what this is about in the actual company. You know, what kind of constraints we're having, what we're actually doing in order to provide tax transparency. And I am focusing on country-by-country reporting and master file and local file on those BEPS agenda items. And I brought you some slides giving you a little bit of look and feel, what it's actually be looking right in the companies. Maybe a little bit of background from the corporate I'm coming from. My company is Deutsche Telekom. We call ourselves, or we'd like to be, one of the leading European telcos. We are having about 1/3 of our revenues in Germany. All our revenues are 75 billion, like 23 billion of them are in Germany. We have another 30 billion of revenues in the US, 45,000 employees there. We have like almost 15 billion of revenues in other European countries, like the Netherlands and the Eastern European footprint. We don't have any operations in Turkey, unfortunately. And we do have a rather significant global IT business, which is basically all over the world, where we provide not telecommunication services, but IT global solution services with roughly 50,000 employees. So altogether 75 billion revenues and 225,000 employees. If we get to the country-by-country look and feel, I only brought you one slide. And this slide is the tabular we actually have to provide to the tax authorities as of this year. And it looks pretty simple, and to be honest, it is pretty simple. It is not very hard for us to get all those data together. Why is this? We are asked for information on a rather high level. We only need to get together the tax payments and the tax accruals for an entire country. And this is not a very hard thing to do, to be honest. And one more thing is, we are not talking about filing a tax return here. So we don't need the accuracy we would do, you know, if we file our German tax returns. It's more on numbers which do not have explicit tax consequences, which are more used for the tax authorities and maybe even the public to look, you know, where are the tax payments of Deutsche Telekom or whatever corporate group are actually located. So we do not think that this is a very tough thing to do for us. Actually, we tried it. We don't have to deliver yet, but we did for the previous year. And it took us, to be honest, not much more than 2 or 3 days. Let's say maybe 1 to 2 weeks, or if you want to do it like very detailed. There are a few guidance items which you still need. For instance, I'm not sure whether you can read this, but this first column here, you need to provide your revenues and you need to allocate it to unrelated parties and related parties. This is a little bit tricky because we have not been told by the tax authorities yet whether we have to do some in-country country consolidation. This is how we could call it. So do you want to have, if you were the tax authorities, do you want to have the numbers, the unrelated and related revenues on a global basis or also including domestic revenues? I think it only makes sense if you exclude the domestic revenues because there is no tax evasion going on, no profit shifting domestically. But if we get this guidance, then I think we're pretty done within 1 to 2 weeks. Why is it so easy? Because our accounting systems, our consolidation systems, they provide for what we call partner bookings. You can exactly tell, you know, this is a revenue, this is a transaction which was done with an unrelated party, and this is one which was with a related party. And so we just ask our consolidation, our accounting folks, and they will provide us the numbers. And also, you know, the numbers of employees. It's not rocket science to figure out how many employees you have in this country and in this country. So from an administrative point of view, I don't think we have a strong case saying we cannot deliver those numbers. I'm not saying that I like country-by-country reporting for other reasons. What I think is very, very difficult about country-by-country reporting is that you have to provide business secrets to your competitors by providing those data. This is, as far as I can see, my largest concern, and obviously that maybe countries like India might think they do not do arm's length principles anymore, but profit split method for transfer pricing purposes. But this is not administrative aspect of country-by-country reporting. So I think this will be done very easily, and I'm going to get to this later. Probably we don't have a great chance of getting protection against this because it's just not too much work to be done. And the same, to be honest, holds true for the master file and local file documentation. You know, if Deutsche Telekom does something, we usually do it properly. So we invested quite a bit of money, but not a huge amount of money, and came up with an IT tool to provide those master and local file data, not only for us centrally in Germany, but also to our subsidiaries in all over the world. And we actually also kind of, we're prepared to give this tool away to other companies because we think it's a good thing. And what the governments are asking us, the tax authorities, is actually not more than a proper transfer pricing documentation, which we probably have to do anyway. And if you have a look at this tool, which I have a couple of slides now, it kind of starts with editing a document. Because if you do a local file or a master file, you just need to write something down. You need to write down what your business is about on a local basis and under like a headquarter basis. And then you need usually some additional information from, you know, your treasury colleagues, from some business colleagues, you know, what is the business all about, number-wise. And in order to do this, you actually usually should share your content with your colleagues, also with the international colleagues, whether they also see it the same way, because it needs to be consistent. And so you need an option or an opportunity or a chance to involve other colleagues. And then in the end, you see, you just finish your local file. And we're going to look at those few steps, and then you can do a preview, and if you're happy with this, you can forward it to the tax authorities. This is basically it. And if you have a look, you know, we call it in German Kacheln. These are these, you know, funny tiles, which you have also on your Microsoft, on the new Microsoft looking. There you can see the checklist where you manage a request, the data processing, manage a template, status monitor, edit a document, new request, preview document. So you've got everything in one tool, which you only kind of have to share in full with your colleagues, and you do it like with some pull-down menus where you ask your colleagues for input. You can actually give a job. For instance, I came up with the business model of trademark licensing. And then I kind of describe, you know, we've got the big T, and we license this to other companies. And then I describe this, and then I ask the business colleague from our trademark management team, how many revenues do you receive by this? Or, you know, do you have anything to add? And then he can also actually get in our tool and get his information in there. And then we collect this, and here you can see all those requests which you have in the tool. There are many of them, obviously, because we've got many business models. And once you can, maybe I think it's on this next slide here, you can actually actually kind of attach documents from wherever you like, from your desktop, so you can get everything in this tool. Here you can see, what is the status of the work. So is it done? Is it finished? Is it is it not really finalized yet? But in the end, the tax authority will, and I think then we are basically done. They will put everything together within this tool, and then, sorry, this is involving other colleagues. I think this is what I already talked about. And here, by clicking Set to Final, you can set all categories to Final at once. So you as a tax guy say, now I'm happy with this, all the input I received. And the next minute, you can actually create a preview. So the system collects everything, the system puts everything together, what all the colleagues all the input of the colleagues. You see here a PDF preview will open a new window. So, and this is, for instance, the documentation for the first page. And if you're fine with this, you can ask your tax authorities, do you want to have it a printout, or would you like to have the electronic PDF file? And then they say yes, or whatever they like. And this is about that it's finalized. So, again, what are we doing here? From a technical perspective, you can use some IT tools, and from a content perspective, we are just asked to describe our main business models and to explain to the tax authorities which country is involved in which business model and what kind of revenues are coming out there. And this information you can collect with all your colleagues in a, to be honest, I mean, we have to do something for this. It's not done without work. But I think the tax authorities have, to be honest, a reasonable right to request those information. And it's not very much more than what we used to do for transfer pricing documentation anyway. So I, if I'm to be honest, do not really see, and this is my next slide, huge cost problems or technical issues that we are kind of burdened with from a BEPS point of view. And in order to kind of make this a little bit more plausible, here I have a few information about our company which relate to administrative issues we need to have to do anyway, like currently, without BEPS, without tax transparency. And this is if you look from a VAT perspective, value-added tax. Deutsche Telekom collects like 2.8 billion of VAT every year, and this is actually derived from 5.6 billion VAT tax liability, and then we've got 2.8 billion input VAT credited, and this means like having 500 million invoices per year. So this is what the tax authorities ask us today, because we are collecting the taxes which actually relate to our customers. So this is a huge effort. And if we do something wrong, we actually have to pay for this, and we are facing criminal charges. The same holds true for wage taxes. We collect 1.5 billion of wage taxes in Germany alone. That means like 120,000 salary statements every month. So this is really administrative burden compared to, if you put this into context with the country-by-country reporting, the same real estate, for instance, real estate tax. We've got 12,000 pieces of real estate in Germany. We have to kind of administer this. And, leave alone corporate income tax. I did not even touch corporate income tax or corporate tax return. Obviously, this is a lot of work. And we have to we have to pay our trade tax, which is like a German local corporate income tax, to 11,000 cities and communities, which means like 11,000 tax returns every year. And then they have interest on this. And this is actually administrative burden, which is kind of much more than what BEPS is asking us for now with a country-by-country file or a proper transfer pricing documentation done via a master file and local file. And the same, by the way, holds true for the US here. For instance, in the US, we have a pretty large US operations, and they also collect 2.7 billion of their, they call it sales taxes, a little bit like our VAT. And I'm not sure whether you have ever seen a US a mobile phone bill so far. They have like 9/11 charges and city charges, and you pay like $35 to us, and about another $10 US for all other kind of FCC VAT charge, lots of very small items, and it's up to us to actually administer all of them. And this is also, if we do it not correctly, we have to pay it ourselves, or we charge our customers too much. And this is also a lot of administrative hassle. Again, if you try to put this in relation to the tax transparency administrative issues, the latter mentions are getting very small. What I do not like from a tax transparency or administrative perspective, to be honest, are not those BEPS components. It's more about specific local tax law requirements you, I think, find in each and every local tax law, probably also including Turkey. I brought you two examples from Germany. Where I think that you actually do have a chance of getting legal protection against excessive administrative burden. And one is that we have a German rule that you have to disclose the identity of every recipient of a payment in order to be able to deduct this payment for corporate income tax purposes. This rule in general makes sense. What are they trying to do? They're trying to do to prevent tax evasion, because if we don't know who got the money, I cannot charge him taxes on this. But they also asked us to do this in M&A scenarios, and if you acquire a target company from a private equity fund, it's not enough for them to actually get the identity of the private equity fund, but they want to know the people who are standing behind this private equity fund. And this is information which even the private equity fund usually cannot give to you, because they have some limited partnership on top of this and then another investor, and even if they could, they would not want to give it to you, because this is their proprietary information. This is like their kind of information which they will not disclose, their investor base, because otherwise other investment funds could also use approach those investors. So this kind of tax transparency is, I think, something which you should not burden your companies with. And why is this? This is because it's not in the sphere of the company. And now we're getting to the legal thing. All the country-by-country reporting and the local file master file is in the sphere of Deutsche Telekom, because I have the data. But the other data, for instance, is something taxed in some other country. This is not in my sphere. This is, I have to ask someone else. And this is, if I need to go to someone else to give me this information, I think I cannot be required to give such information to the tax authorities. Then the tax authorities should actually go to this other person and ask them, and not ask me to ask him. So this is for me the red line. Whatever is in my sphere, I'm very happy to convey to the tax authorities. But if I'm asked to get information, you know, what's in the other sphere, and this is also my second example, and this actually does relate to Turkey. We have a new rule in German domestic tax law, according to which an employer needs to withhold withholding taxes also on foreign employees, like cross-border expatriates, to the extent that these items of salary are not taxed in the other country. And they are, one very basic example is, I'm going to be sent to Turkey to do business, and I'm going to stay here in Istanbul for 1 year. And then I might get a shuttle transfer from the airport to my home place, and maybe also from my home to the company's headquarters. If this shuttle would not be a fringe benefit under Turkish tax law, I don't know the Turkish tax law, but I'm not sure whether you would have to pay taxes on this, on the shuttle service, then I'm now required in Germany, as a German company, to tax this, Turkish shuttle to the airport. And this is something which I do not really know sitting in Bonn, like in Germany. Do Turkish tax authorities actually levy taxes on the shuttle to the airport, or don't they? I don't know. This is also an example where I think, again, it's not in my sphere, and this is the reason why I think I cannot be required to give this information to the tax authorities. A second thing, which and we heard about this this morning, what I do not really like is the mandatory disclosure rules. Christina was talking about us. I do like the mandatory disclosure rules in general, because I think it's a pretty good way to prevent tax shelters and to prevent very aggressive tax planning. But what I do not like is if they also apply it to mere in-house transactions. So I do understand if there is a model and if there is some accounting firm going to this firm and to this brand and to this client and saying, you know, don't you want to do this? And because then it's pretty clear it's modeled and it's something which is probably, you know, done in multiple ways, and so the tax authorities should know about this as soon as possible. But Christina also wants to extend this to mere in-house transactions. Like, I think I have a very good tax idea for Deutsche Telekom. I don't share it with anyone. I just do it within my company. If I had to disclose this one to the tax authorities, I think it would be a huge degree of uncertainties of what I would actually have to disclose to the tax authorities. Is it every year, you know, if I have a good idea of how to depreciate an asset a little bit more, probably, to be honest, a company like Deutsche Telekom could live with this because we have a sophisticated tax department. But small and medium-sized companies, I'm not sure whether their kind of tax guys really know what is an innovative structure, or what is done nowhere else, what is really new to me. So I think we would add a lot of complexity and tax uncertainty if we were to also expand those mandatory disclosure rules to mere in-house tax planning opportunities. If we now get to the protection part, we basically touched upon all major issues. We have this tax court of Cologne, which I think Johanna also mentioned yesterday, according to which the German tax authorities said there is not allowed fishing expeditions. In Germany we call it how do you say, Ermittlung ins Blaue hinein. It's like trying to find something in the blue. Like fishing expeditions is not allowed under German tax law. And now it's a question, is country-by-country reporting, is master file, local file, is this about a fishing expedition? I do not think so, because master file, local file gives the tax authorities actually some good device in order to do a proper transfer pricing analysis, and also country-by-country reporting may be used at least for tax audit risk management purposes. So is it worth auditing this guy, or is it more worth auditing the other guy? So I think it's not about fishing expeditions, it's about doing a proper tax audit. Then we do have an additional legal limitation to disclosure obligations under German rules. It's a paragraph 90 of the Fiscal Code, Abgabenordnung. And according to this rule, taxpayer only need to disclose tax-relevant information which is in his or her sphere. So now we're getting back to what I told you, what I was discussing before. While I think country-by-country reporting and local file, master file is within my sphere, I do not think about those overarching, overburden, provision in German tax law, like telling you the identity of a private equity investor also like 7 rows up the corporate chain. So, to make a long story short, as far as I can see, country-by-country reporting and master and local file requirements, or master local file, the master local file instruments, they do both met all requirements, the 2 requirements we have here. So I think it's going to be very difficult to get legal protection against excessive administrative burden, and be it only because the administrative burden is not excessive compared to what we have to do for our tax authorities in other fields by collecting those really VAT, wage taxes, and also corporate income taxes. So let me summarize and conclude. Transparency disclosure requirements from BEPS are, as far as I can see, non-excessive. So legal protection is rather unlikely. For 2 reasons. First, it's non-excessive, and second, both country-by-country reporting and master file, local file are relevant for tax purposes, and they are within the sphere of the taxpayer. Having said this, again, there might be tax policy reasons, also against public country-by-country reason, but I cannot, to be honest, see a large corporate going to court and saying that was too much of a work for me to get together the country-by-country reporting. And I would not go to my CFO, my boss, which I only do, if there are very, very important things, and tell him, they introduced those country-by-country reporting rules and we can really not do it. Then he would ask me, Christian, are you sure? Are you sure you cannot do this? You do so much stuff, and this one you cannot do? And I would have to admit, yes, you're right, I can do this. So it's actually not excessive, and probably all other corporates think the same thing. This doesn't mean that we should not have some legal protection against other disclosure requirements under local tax law, but this is something which every country needs to look into its own tax law, and we have 2 examples in Germany. And with this, I have to disappoint my corporate colleagues a bit who thought that administrative excessive burden might help them out of country-by-country reporting. I don't think that's a viable way to go. My recommendation would be just do it, and you're going to see how easy it is.